Hey guys, Toby Mathis here, and today we're going to dive into 2025 housing predictions with the mad scientist of multifamily, Neal Bawa. Welcome back, Neal.
Well, thanks for having me back, Toby. It's been so exciting to have these conversations, and on my YouTube channel, these conversations that we have are always at the top. So it's great to be back.
Yeah, let me set the table for those that don't know. Neal manages over $600 million of multifamily real estate. And I like people that actually do, that don't just talk. And there's a lot of folks out there giving all sorts of bad information. They're always scaring the hell out of people. And I like just having folks that are data driven, that tend to look at numbers and actually live by this stuff, live and die by this stuff. So it gives them a unique perspective. And Neal, I'll go back a few years ago. We were talking about the market, and I just happened to say that we were right. But you had one video that we did together that went viral, and just a lot of haters out there. I don't know. Did you catch any flack off of saying that the market wasn't going to crash?
Oh, well, yeah. So the same video went viral on our YouTube channel as well. So you guys got more views than we did. But it was funny reading the comments. I mean, there were comments like multifamily is going to crash. You don't know what you're talking about. There's going to be properties sold on the courthouse steps, and this is going to be like 2008, but much worse because there's 1.7 trillion dollars in debt coming due. And we addressed that. Yes, there's 1.7 trillion dollars coming due, but 95% of it is for stabilized properties. It's
Hmm.
5% of that that's really for properties that are over leveraged, things like that. And it was super interesting to see that people will simply take data from a TikTok video or an Instagram post and not even go and read the original article, which may, by the way, be written by somebody with an agenda. And they don't even do that, but they simply take this 30, 60, 90-second clip on the web and start to basically spread it as if it's truth. Um, I spend at least 3 to 4 hours a week reading really boring documents that are usually 50 or 100-page reports that are written by people that are very cautious. They're very careful. They'll qualify every damn statement that they make. And even when they have an agenda, they'll actually point out that they may have an agenda, right? And but the people that were watching this YouTube clip had gone and just done trivial stuff on the web, and on the basis of that, their opinion was single family will crash because rates have gone up, and multifamily will crash. Well, here we are, and I'll give you the numbers if you want. I mean, 2 years later, there hasn't been a single instance of a courthouse sale that I'm aware of. I don't know if you've seen one. And this distress that people talk about, basically all that's meant is some properties have been sold at prices below what they were purchased at. If that's the definition of distress, well, give me distress every day.
Yeah, it's definitely not crashes, and that's what we're always cautioning. Is I always thought that there would be single digit growth, and that it wasn't going to be as great as it was. Like we just had massive growth between 2000 and right after COVID, you just had this ridiculous high. So I think we used the example of it's an airplane going up to 35,000 feet, and it's leveling off, and it might go down to 30,000 feet, but it's certainly not plummeting. And that's the
Yep.
economy, is it's kind of cruising along, and real estate's no different than just about anything else. But I want to get into the data, because you always come loaded with facts, and I always say facts don't care about our feelings, but they do tell us a story, and people take them and they use them for their own agenda. I tend to be looking at it from my standpoint. I'm a tax attorney. I like the deductions that are associated with real estate. They can give us some tax relief. They can keep us from having to pay tax on income. Plus,
Hmm.
it appreciates, and you can borrow against it tax free, and it resets, and you have a step up in basis when you die. So I have all my reasons for liking it, but I like hearing your reasons, because you're a income guy and you're involved in this day in and day out. And I'm sure that you come armed with some really good facts.
Yeah, at the beginning of the year, we do this presentation on our website, multifamilyu.com. About 2,000 people watch it.
Mhm.
And we basically present data that we've looked at. So we looked at 2024. And when I look at 2024, the first, nugget that comes to mind when I'm presenting data is this was a extraordinarily resilient year, right? So we had ultra high interest rates that we had to deal with. Sure, they started coming down towards the end of the year, but for most of the year, they were ultra high, right? Much higher than what we're used to. And the economy did phenomenally well. So just some numbers just to set the groundwork, right?
Mhm.
The stock market went up 25%. Nvidia went up 171%, but the US stock market went up 25% in a year where we had ultra high interest rates. And most people thought that would be a recession. So obviously, we didn't have anywhere close to a recession. We had 188,000 jobs created per month, which is basically a steady Eddie 2.5% growth year that any day we would take. If you told me that's how many jobs we should get in 2025, I'd say gimme, 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 right? That's how good the year was despite ultra high interest rates. Also, a lot of people, there's a lot of hatred on the United States on the web about the U.S. For some reason,
Mhm.
we're in decline, we're going down, we're worse than everybody else. So just to share that 25% for the U.S. stock market was the best performance amongst the G20 economies. The Of the 20 economies in the world that are the biggest economies, the United States had by far the greatest performance, and it just didn't do that for the stock market, right? So look at currencies. Oh, the US dollar is going to go down, the BRICS currency is going to rise, blah, 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 blah. Okay, here's the actual numbers from 2024. And once again, this was a year where our interest rates were very high. So we had a lot of pressure, downward pressure on our economy. We were supposed to go into a recession. The US dollar outperformed by a very large margin every one of those economies and currencies that are supposed to replace us. We went up 7.1%, right? The British pound down 2%, the Mexican peso down 2%, the Indian rupee down 3%, the Brazilian real down 21%, the Russian ruble down 18%, the Korean won down 12% against us, right? There
Mhm.
was no currency that I can think of that appreciated against the US dollar in a year where we put in intense downward pressure on our economy to lower inflation. We started the year with 6% inflation. We ended up with 2.6. So we won the war against inflation, and we did it simultaneous while beating every other developed country.
Do you think that one of the reasons why we're not celebrating the victories is because we had such a contentious presidential election? I mean, I don't remember
Absolutely.
ever seeing a candidate get forced out of running, and you had somebody who didn't go through the primary system at the last minute. I mean, it just seemed
Shameful, by the way.
it,
Um, in
interesting.
my
And I
case,
was going to say it seemed interesting and unusual. I try to
well,
stay apolitical, right?
I know, but I think that, even though sometimes I've leaned Democrat, in my mind, nominating something like that smacks of, kings and queens and a bygone era. But I'll just get back to your point. Yes, absolutely. You have one group saying the US economy is horrible because they want to get elected. And then you have one group saying the US economy is incredibly good, and they're actually taking some of the benefits of the other group when they were in power 4 years ago. They're benefiting from that. As far as I'm concerned, I'm not in politics and I have no intention of ever being in politics. If you hold a gun to my head, I won't run for mayor of a city. I won't run for mayor of a housing council, let alone a city. So I don't like politics because you know what it does is it messes with your head. I like to look at numbers. The numbers say that 3 years ago, we had lots of reasons for the US to go down. Interest rates are going up. Then we had lots of reasons for the US to go down 2 years ago because a recession was coming. Then last year, we had another reason, and then we had this election happening. The point is, all of these 3 years, the United States economy has outperformed every major economy in the world. In fact, if you look at the corrected numbers from China, not the official numbers, we outperformed China, which has been the world's engine of growth for 3 decades. We outperformed them if you look at their real non-official number. They publish official numbers that are a bit too high, I think.
So we know that the economy is strong, but then
Mhm.
again, there's also numbers that say, "Holy crap, homelessness went up 18% last year." Like there's we had a 1.8 trillion dollar deficit. Like we're spending money like drunken sailors. We're printing money. We're bonds. Now we're trying to give them away. You still had you have all these issues. You have homelessness going up. And then you're juxtaposing that to one of the strongest economies that we've ever had. And you always say like something's going to give, right? Or hey, can we do better? And that's what I'm going to throw to you right now. Here's 2025. What do you think is going to happen?
I'm going to say something that sounds completely heartless. So I just want to tell people I feel for the homeless. I give to the homeless. A lot of my charity goes to them. But here's what I'll say. America's actually getting richer. So we have generational wealth that's going to pass from Gen X to their descendants. It's the greatest wealth transfer in history. The truth is, the bottom 5% of America contribute less than 0.1% of our GDP. I feel for them. these people shouldn't be on the streets. Let me tell you this, if instead of an 18% increase in homelessness, it was a 50% increase in homelessness, it still wouldn't impact our GDP because the very bottom tier has an infinitesimally small impact on our GDP. It just has a big impact on our hearts. It emotionally makes us feel bad about the country. But when I look at the numbers, the actual contribution of these people to the GDP is extraordinarily small. So very heartless comment, but also true. You have to make logical decisions with logic. These are math-based decisions, right? And from a math perspective, these people don't have a significant impact on the US economy.
But I will say this: I always remember Milton Friedman. There was a video of him when somebody was talking about affordable housing. I think it was back in the '70s, and what's the government supposed to do about it? And he was looking at it, going, "It's not about the government. It's about what system will yield the best result for the greatest number of people." And so I look at it saying, we have
Greatest
a
number,
great
the
system.
greatest number.
And right now, that system seems a little broken because it's not catering, or it's not allowing us to, the business community, to make a good case for taking care of that issue that's a blight on society. Like, we shouldn't have this. And regardless of what somebody's position, because I hear people say, oh, it's a mental illness, or they're not working, or they're not trying hard enough, or whatever, right? I get it. We're a wealthy country, we shouldn't have it. And as real estate folks, you and me both know, they make it really difficult to cater to affordable housing. It's really difficult. Hopefully we get some of that red tape out, and we get some of these prices under control so that you can build, and we get some innovations. Maybe it's 3D printing, maybe it's manufactured housing, maybe it's doing pad splitting and shared housing, but that we can focus and get profit by solving that issue, which capitalism seems to do the best job.
I
Saying,
agree capitalism does the best job, but I want to caution you, I wouldn't hold my breath for any of these solutions. 3D printing, there's a single company, Icon, that is working in the US. They have one project in Austin. I dug deep and found out that the subsidies in that project were extraordinarily high. Basically, they were saying that these homes are being printed for cheap, but there were tens of millions of dollars of subsidies. I think it's 3D printing is the great white hope of the future, but it's not the great white hope of the next 5 years, not the next 10 years. Beyond that point, I think we can get some benefits there. It will take a long time for that technology to become widespread. In the same way, the government does a terrible job of affordable housing, right? We used to have affordable housing in this country until about the 80s and then the 90s. And then, Clinton basically killed it in 1999. And since then, we've had almost nothing. I don't think that the government really has the money to do affordable housing. Right now, the focus is on this massive fiscal deficit that we have. I don't think that we're going to print hundreds of billions of dollars for affordable housing. I think any work that has to be done by the private sector. And we're handcuffed there, but we're still producing a lot of housing. And I'll give you examples. So last year, the single family sector produced 1 million new homes in America. Now, they weren't affordable, they were expensive. But here's what happens when you add 1 million to the supply, the portion at the bottom of that supply, that portion becomes cheaper or doesn't become more expensive with inflation. Maybe it didn't go,
mm,
didn't get cheaper, but it didn't get more expensive. So when you add 1 million in supply, you are doing something very important, because guess what happened? If we didn't add that 1 million in supply in the last 12 months, home prices would have spiked further, right?
yep.
So the single family development group is doing a very good job of adding 1 million homes to the supply. The multifamily group, which is a group I come from, added 600,000 units, which is one of the largest supplies in multifamily history. We did it once before in the 80s. But leaving that aside, we added 600,000 units. All of that was private enterprise. I can tell you maybe 1% of that money was subsidized. 99% of that was capitalism saying, we've got to figure out how to build homes or apartments at prices that people can pay. And because 99% of this inventory, 1.6 million homes or apartments, got absorbed immediately, fundamentally we were able to produce units at prices that people would pay, because otherwise we wouldn't be able to sell them, we wouldn't be able to rent them. So it still works, it's a functioning system, and it's a trickle down effect. We build stuff for class A people, 20 years later that building becomes a B, 40 years later it becomes a C, and then 60 years later it becomes a D. And that trickle down effect is how housing works in America. It's not perfect. I would love for there to be affordable housing, but we're not doing as badly as people think we are.
No, I just think we're not keeping up with the demand is all, right? So we're underbuilt, which is great for real estate, by the way. Like this
It
is what
is.
I would
It's
say. Like
phenomenal for real estate.
it's the old supply and demand. There's a limited supply. Yeah, we did 1.6 million units, but we needed to build that keeps up with about what we need to do on an annual basis, which I always hear between 1.7 and 1.8. So we're still not building fast enough. But there's also, hey, we're about 5 million units underbuilt. Like,
We are roughly 5 million. That includes single family and multifamily. So it's a combination of those two. Multifamily actually, for the first time in a decade, built the right number of units. So we actually, absorbed slightly less units than we built this year. So our vacancy ticked up a little bit. So the first year, we actually built what we were supposed to be building. But here's the bad news, right? Multifamily takes 2.5 years to build. So I already know how many units are going to be built for the next 2.5 years, correct? Because if you haven't started them yet, you're not going to finish them in the next 2.5 years. Well, because of high interest rates, the multifamily permits have dropped massively. In certain markets like San Antonio, they've dropped by 78%. In other markets, they've dropped as little as 30%. But even the 30% drop in permits is going to hurt future supply. But imagine a market like San Antonio, which is down 78% from peak, and a market like Philadelphia down 80% from peak. Well, we're pretty much guaranteed to have ridiculous rent growth in those markets in 2 years because there's just not going to be any supply, right? Nobody is building at this point in time because interest rates are very high. So the challenge with real estate is when we spike up interest rates, it does make things hard for us in the rent growth goes down and it's harder for us to buy, to build, profits get hurt. But ironically, high interest rates then create a supply gap in following years. So 2025, 6, and 7 are guaranteed. This is not a prediction because once you pull a multifamily permit, you kind of occupy that building for about 30 months. It takes 30 months until we come up with some magical wand to make multifamily faster. Single family takes about 14 months, 13, 14 months. So it's a little bit quicker. So I can simply look at last quarter's permits and tell you how many units are going to be delivered roughly 30 months from now. I know it's going to be undersupplied. There is a guarantee of undersupply in 2027 and in the second half of 2026. And that's a crystal ball that actually works. I hate the word crystal ball, Toby, because people will hold me to something 2 years later. So I'm saying if you want to hold me to one thing here is multifamily is going to be undersupplied because we are not starting enough new buildings because the mathematics of interest rates is not working at this point of time. And guess what happens? The market evens out because rent growth spikes. When rents spike, we are able to get more value for the property, so we're able to pay more in interest. So the market will even out over the next 2 to 3 years. But for the moment, there is no doubt in my mind that for single family landlords, and you have a lot of them on your podcast, expect very sharp rent growth, depending on your market, starting from early 2026 or mid 2026. You should see sharp increases in rents for all multifamilies and all single families.
and what happens if interest rates actually start to drop?
Dual effect, right? So this is
Mhm.
fascinating, right? So when interest rates drop, there's some positive absorption on the single family side because the mortgage drops, right? You can afford a bigger mortgage, so there's some people who are renters that are going to go over into onto the other side. So it helps rebalance things a little bit, right? So multifamily, by the way, just had the apartment industry Q4 of 2024. We're recording this early 2025. Q4 of 2024 was the single greatest quarter of absorption for multifamily in modern history. Since we've been tracking data in the 50s, we built a very large number of units in Q4, so the supply was massive. 155,000 units were delivered, but we absorbed 230,000. You know what that means? We absorbed every single unit that we built in Q4 and 75,000 more. And where did those 75,000 come from? Well, multifamily nationwide is not at 100% occupancy. It was at 94% occupancy. By the end of the quarter, we were at 95% occupancy. So some of those empty units, they got filled up, right? So we're coming off of, in my mind, the most astonishing absorption quarter in our history. So what would happen, in answer to your question, is if interest rates go down, let's say they go down by 100 basis points. The Fed is saying they're going to go down by 0.5%, which is 50
Mhm.
basis points. Let's assume they go down by 100 basis points. Well, at 100 basis points, all that happens, is that the 18 million families that we've marooned to rentership, right? Out of those 18 million families, roughly 2 million now can afford to buy a home and get on the other side of this renter versus buyer, phenomenon that we have going, right? So home ownership in the United States is falling, right? So 66, 65, 64. A certain percentage of Americans were homeowners. My prediction is this: within 10 years, we're going to get to less than 60% of America owning their homes. And homeownership is such a fundamental thing in America that this is a terrible piece of news for the country. But it's incredible for apartment owners, right? Because we are seeing absorption rates that are truly mind blowing, that I would never, never, never expect to see. But it's happening because interest rates are so ridiculously high that we've marooned a good portion of middle America to be forever renters, right? And this has happened since COVID, and I'll give you those numbers.
But I will say this. I don't necessarily think that's a horrible thing. Like I like home ownership too, but I like home ownership to a certain extent. Home ownership in 2005, 6, and 7 wasn't such a good thing, right? These were underwater. They wouldn't rent for what they were buying them for. In other words, they were buying on comp, not on cap. And ultimately, the market will tell you what a house is worth based off of what it'll produce. So rents going up is a great thing from a real estate standpoint as far as
Absolutely.
things worth it. But I still look at it saying you just have to change your thinking, not you, but in general, a person, if they're not able to afford to buy a house, then they need to be attacking by living below their means and investing the difference. And you could be investing, it could be going into multifamily, it could be doing syndications, it could be, well, if they can qualify as a credit investor, more than likely it'll be REITs or the stock market or something where they're able to allow that to grow so that eventually, yeah, they will be able to afford a home. But it's not just going to be, spending everything that they have bringing in. It's this, the saving needs to occur. Savings rate in America, I think it was around 5% last year. I'd love to see that be double that. I
Yeah,
was
I think our savings rate is a worry. I mean, you mentioned it, right? Our federal deficit is a worry, but I look at federal deficit from a world perspective. So when I look at the federal deficit of 20 other economies, starting from Canada to the UK to China to India, well, maybe not India, not so bad, but China for sure. Japan is incredibly bad. The only thing that keeps our federal deficit in control and keeps people buying our bonds is that everyone else is unbelievably worse than us.
comparatively.
So for the moment, and this is a bad thing to say, we still are the best looking pig in the pigsty. But if we keep spending the way we are, we will have that privilege taken away from us.
Yeah, well, it seems like they're attacking, and government efficiency is it'll be the Department of Government
I'm very
Efficiency.
hopeful. I'm very hopeful. People are like, there's no way Elon Musk can cut 2 trillion. Okay, how about this? He fails and cuts 250 billion. I'll take 250 billion.
We were 700 billion in the first quarter of 2025, meaning that
Yeah,
because the government's fiscal year end is actually September, the first quarter, the last quarter of 2024 is like the first quarter of 2025, and they were 700 billion behind. We were at 1.8 trillion behind for 2024. So 2025 is getting off on the wrong foot. If they can correct that, then maybe we're only going to be a trillion behind, which just means mass still inflation, right? That's all that is. It's a big old tax, but it's also they're going to print money or they're going to sell bonds, right? So you have two choices, but it's inflationary, period, and it's
it
going to
definitely
continue.
is, and that's why I'm in real estate. So I have seen no evidence that any country in the world, not just the United States, any country in the world, and there's many countries with much bigger deficits as percentage of GDP than us, has actually found a solution
Yep.
for money printing. No one has. And I know that there's a big challenge coming for us, but there's economists have only come up with two concepts of what would happen 10 or 15 or 20 years for the world economy to adjust, and all of those scenarios are actually pretty darn good for real estate. Hyperinflation, for example, is phenomenally good for holders of real estate. You can go from making 2x in 5 years to making 10x in 5 years in hyperinflation. A perfect example is Argentina. So Argentina is a economy currently going through high inflation. So is Turkey, so is Nigeria, so is Pakistan, so is Sri Lanka. And if you look at all five of these countries, this is all stuff that's happened in the last 12 months. Everyone that was sitting on real estate has turned into, I mean, instant mega millionaires, right? Because that real estate has all of a sudden, in dollar terms, or in their currencies terms, is worth 3 times, 4 times as much as it was just 2 or 3 years ago. I'm not saying a hyperinflation will happen to us next year or the year after, but it's a nice that real estate is a hedge against whenever that happens, because it's inevitable at some point in the future.
I think again, Milton Friedman, not to beat the dead horse, but the fact of the matter is that when you have these inflationary cycles, it devalues the debt that you're incurring now, and it's not a bad thing for the government. So they may want it to occur, which is why you're always kind of fighting. They're like spend, spend, spend. It's the old, build the ship and then go sink it in the ocean. But we generated GDP, right? And you're like, well, wait a second, that's just insanity. Well, to a certain extent, it is. There's a
Yeah, it's not as insane as it is for
yeah,
governments. Actually, for individuals, it's the worst possible thing to do, to build a ship and sink in the ocean. But when
government.
governments do it, it actually permanently increases the size of the economy. And the economies are inflexible. Once they're a certain size, they don't want to go back down. They want to continue growing. They have a tendency to grow. So nations that have, done inflationary spending in the last 20 or 30 years, ironically, are much further ahead in GDP than ones that were extraordinarily conservative.
So let's bring this back to real estate and your
Yeah.
predictions for 2025. It sounds like you're bullish on real estate in 2025, 26,
I
27.
am, with some caution. So in my mind, interest rates are still too high, and what I'm a little bit nervous about is the direction of interest rates. So if
Mhm.
you had me on a podcast 6 months ago, Toby, I'd say I was pretty sure that 2025 would be 100 basis points or 1%, decline in interest rates. Now I can't say that. I think the Fed changed its mind in December and switched the dot plot to 0.5% cut in interest rates. Maybe we'll get one more cut, but I don't see us getting to 100 basis points now. So what's really happening is that there's still bad stuff happening on the real estate side that's being kicked down the road. Like on the multifamily side, delinquencies are picking up in the last 6 months because the can was getting kicked down the road and kicked down the road, with people believing, okay, when the rate cuts come, they'll come in a flood and we'll be able to refinance all of our debt. Well, that hasn't happened. So I think that what slows down multifamily valuations, at least, not rents, I think I'm very, 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 very bullish on rent growth
Mhm.
across the board in the United States, and in Southeast markets in 2026, but across the board in 2025. Bottom line is that I'm not so bullish on valuations of multifamily, because I still think that there's a huge amount of potential delinquency that can turn into, not necessarily fire sales, but sales where there's pressure on prices and it doesn't allow prices to increase. On the single family side, it's similar. Remember, multifamily prices over the last 2.5 years have declined by between 20 and 25%. And people use different measures, 20 to 25%. Single family prices in the last 3 years have gone up. They've gone up about 15%. So single family hasn't reacted to interest rates the way it used to do it in previous cycles. If you look at the last 9 times that the Fed raised rates, either single family prices went down or they were flat. Well, this time they went up. So they didn't react to interest rates. And because they didn't react to interest rates, they are hitting a ceiling. So when I'm looking very carefully at single family data all across the US, the first thing that's happening is there was this time frame which lasted for about 2 years, where less and less people were willing to sell because they were locked into their low interest rates, right? I'm locked in at 1.75% for my home. So I can't move because my mortgage is going to double if I move, maybe even triple, right? So I can't move. That lock-in effect can only be held for so long before people have to move for jobs or other changes. So now we're seeing more inventory come in on the single family side. So I'm not really bullish about single family home prices increase for 2025. I think we might get a small increase. I'll pick a number that Zillow had. I think it was 2.3%. I think that that's where we're going to be. So we're going to stay barely with inflation for 2025. The real benefit is going to come from accelerating rent growth in the second half of the year, because the inventory of apartments was dragging down rents for all the single family guys. A lot of single family people, for some reason, think that they don't compete with apartments. Of course you do. Of course you do, right? There's apartments, Class A apartments, that are charging more in rent than single family. So those people have choices, right? So there is competition between single family rents and multifamily rents, because multifamily rents didn't rise at all in the last 12 months. They were flat. That made it very hard for single family landlords to raise rents. That problem goes away in 2025, especially in the second half. So if you're a single family landlord and you're not raising rents by at least 5, 6, 7% in the second half, you're out of touch with the market.
So then your prediction is second half of the year rents are going to escalate
Very strongly.
strongly. So
Mhm.
get with your property manager. Make sure that you're actually addressing that and that you're looking at the expiration date of your rents or of your leases and that you're addressing that because you believe it's going to be very pro landlord to continue to escalate it. I'm assuming that then you also think that real wages might be going up too, that we might be seeing people with the ability to afford that, or do you think that affordability is going to continue to be a significant issue?
It absolutely will be a significant issue because I don't expect that wages will go up in track with rents. Actually, what's happened is rents have become more affordable in the United States in the last 2 years because overall rents in the US are up about 2%. Overall wages are up about 7.5% in the last 2 years. So affordability has improved just a little bit. I don't want to make a big deal of it, but it's improved a little bit. Next year, I expect rents to be higher than inflation. So if inflation's at 2.5%, rents might be at 4. And so we're going to make it a little less affordable, but it's not going to be a huge jump. I do expect payrolls to remain strong. So for the moment, like December numbers just came in. What's the December number? 256,000 jobs. So the economy is creating phenomenal numbers of jobs for such high rates. These interest rates, just listen to what the Fed said. They had a meeting day before yesterday. They said interest rates are higher than they should be, but we still want to keep pressure on the economy because we're seeing the job growth being absolutely phenomenal. Some of it has to do with AI, but a lot of it has to do with simply the fact that the US economy has actually outperformed beyond what anyone else thought. A lot of that is because much, much, much worse things are going on outside the US. And one of the things I want to state, and again, I hate getting political, but I think this is worth stating the challenges that the US is seeing, this wave of anti-capitalism, this wave of basically saying capitalism is bad, is exponentially worse in other countries in the G20. It's exponentially worse in Europe. It's exponentially worse in the UK, in Canada. And so money has actually ironically started to flow in because even with our anti-capitalism, we're still way better than what other countries are doing. There's completely crazy near socialist stuff going on in other countries, which makes our socialism look very moderate, actually. And
Yeah.
and so we're benefiting from that.
And it seems like we're addressing it too. It does seem a wave towards.
I hope so. I come from the funny thing is when you grow up in another country and you look at what socialism truly means, you come here and you laugh at what we think it means. It's absurd. Non-capitalist policies are a guarantee to slow down your economy. They're a guarantee to slow down your wages. And I haven't seen anybody be an exception to that. Like I'm struggling to name one country that has socialist policies and still grows at 3% a year. I mean, I honestly don't think that there's an example of any such country.
It's interesting because you have an administration that says they're going to cut a lot of the red tape and embrace the true capitalism and allow it to take off. And it'll be interesting to see if it does.
I'm
Sounds like you're
hopeful.
bullish on 2025, which is great to
I'm
hear.
actually more bullish on 2026, and I'll explain why. The supply trough, the point at which supply is lowest, is all of 2026 and the first half of 2027. That 18-month period, we should see very tremendous rent increases as long as the economy continues to hold up. If we're producing 200,000 jobs a month, we should see phenomenal renter household formation, single family, multifamily. Single family guys, look, you guys actually benefit a little bit ahead of us. So if we're going to see good times in multifamily, you're going to see them 6 months before us.
Yeah, we're pushing on it right now, and we're trying to do our part because I'm a single family guy. You know that.
Mhm.
I do have multifamily, but I love the little houses. Um,
And by the way, for everyone watching, Toby's done better than I have in the last 2 years because multifamily prices went down. But everything that Toby owned, none of his rents went down, right? So they were either flat or up. But the value of his assets went upwards. The value of my assets actually went downwards. So the single family guys outperformed the multifamily guys in the last 2.5 years.
but I'll say this: it's getting more. Insurance is going
Mhm.
up. I just had a unit, multifamily unit. Like I have like 16 plex. It we saw a 50% increase in the insurance, property taxes. Governments need their money. Those aren't going down. They
And
really
that
aren't.
puts pressure on rents because as a landlord,
We have
when
to
I'm
check.
paying so much more on insurance, I am really pushing rents. And it's not that I can push rents by myself. I can't. I'm just one player in the market. But imagine if every apartment complex in the United States had rents going up, had insurance going up double digits. Every single one of those landlords is having a conversation with their property manager saying, I can't have you have the same rents. You need to raise them. So there's an upward push on rents because the insurance costs in the US have completely
Mm-hmm.
gone out of control.
Hey, Neal, I think we draw it to a close. I want to just say I really appreciate you coming on. Where should I send people if they want to learn more about your numbers madness? Which I love the fact that Neal is a numbers guy because I am too. I really there's folks out there that kind of do it intuitively, and here's Neal, and he's spending time as a kind of in the scientific method of here's what the numbers say. But where can they get a hold of you, bud?
Multifamilyu.com. So this is our sort of one-stop site. Even though the name has the word multifamily in it, we do 12 webinars a year, and many of them have nothing to do with multifamily. So we'll do one for single family, one for multifamily, one for Airbnb, industrial, self-storage. We'll do webinars for things like artificial intelligence, or how is climate change affecting insurance rates, stuff like that. So these are webinars. About 14,000 people signed up last year to attend our webinars. All of that at multifamilyu.com. If you're looking to invest with us, that's still the right place to go to, because usually during a presentation, we'll spend 30 seconds on any upcoming projects.
Perfect. Well, I appreciate you coming on and sharing. And then, guys, put your comments below. What's your prediction for 2025? Like and subscribe, and we'll see you back here.